Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Ladies and gentlemen, First Republic Bank is in serious trouble, and today we need to describe what is going on with the bank, how they got here, what you need to know as an investor and consumer. They are one of the larger regional banks, primarily in the Bay Area. They were built to serve the higher clientele in that area, and they were started in 1985. However, 2023 could be the end if they don't find any resolution to their business issues. How did they get here? There are a few reasons, but the primary reason is higher interest rates. When interest rates went up, it really threw off the balance and cash flow of this company, and it got a whole lot worse than what it has been over the last 5 years or so. When SBV failed, and since then, 40% of the company's deposits have walked out the door. 40%. And the issue here is this. SBV increased their assets, which are loans for banks. They increased their assets around 12%. First Republic increased it by 24%, which means that they doubled their assets. They said, look, I see what's going on. We want to make sure we can get as much money as possible. We're going to make more loans. We're going to buy more bonds. However, the issue is in 2021 and especially in 2022, when they did that, they're only getting paid about 3%, which was okay back then. But now they're loaning, when they take a loan from the Federal Reserve or they're paying just the regular bills, they're paying 5% and you can only make 3%. And there's nothing they can really do because remember, that's a 30-year mortgage. People tend to stay with those for quite a bit of time. The bonds that pay decently well, or at least they did the last 2 years or so, those are 10, 15, 20-year bonds. They're stuck with that. You have to wait through maturity to pay those off. But the issue is right now, you need money, which you need money when somebody says, hey, look, I want my money out of the account now. If they sell it now, they're going to take significant losses because nobody is a bank or business. I don't want to buy a mortgage that's paying 3% when I can go get them for 6% right now, right? If I'm going to buy a mortgage, I want to, as a business, not as a person, I want to buy one that's going to pay me 6%. I want to buy a bond that's paying me 5%. I don't want yours if yours only pays you 3%. That's the issue here. So they bought way too much and expanded too much by getting assets that aren't paying what the market is paying right now. So they're paying 5% on loans to run the business and you're only making 3%. But here's the other issue. They haven't been in a great position over the last 5 years or so. So what I did was pull their free cash flow. This is the money that you would have if you owned the business and you were, paying off all the bills, doing all that stuff. How much money would you have in your hand after all that stuff is paid? 2018, it fell by 15%. 2019, it fell by another 21%. 2020, it fell by another 50%. So negative 15, negative 20, negative 50. In 2021, it increased by 163%. However, remember, you had 3 years of consecutive losses, then you hit the pandemic and you bounce back by 163. A lot of companies bounce back. But then in 2022, just last year, it fell another 94%. That is 4 out of the last 5 years, the company has lost money. And every year in that section, the least loss that they took was 15%. So you're talking double-digit losses 80% of the time. So that is the state of the bank. We will see what their solutions are going to be. One, somebody can come in and buy them, but obviously it's not a business that's in a healthy position, so I'm not sure if anybody will want to take that on. Number two, maybe you have friends in high places at Wells Fargo, Citi, Chase, and Bank of America where they'll say, look, we're going to let you hold on to, I'm going to throw a number out there, $50 billion just to sit on so that if anybody asks for a withdrawal, at least you will have that money available to you. Maybe it will happen, maybe it won't. It has happened in the past. By the past, I mean like the last 8 to 10 weeks. And those companies have come together, a consortium of banks, if you will, to make sure the financial system still works. We'll see. I have no insider information on whether that's going to happen or not. What I can say is obvious. I don't think this is a good investment. Okay, I don't know why anybody would write that, but I don't think it's a good investment. I think it's very obvious. Anything that's down 90% is likely something that you probably do not want to buy, but also the financials don't look all that great either. They did announce earnings, I think today. They beat their estimates. but I still don't believe that that is something that constitutes a good long-term investment that you may want to consider. I cannot say with definitive, I can't say a definitive statement that, yeah, this bank is absolutely going to fail. Okay, I don't know that. Somebody could easily step in. It happened with the bank not too long ago. We will see if that's going to be the case. But this is a significant movement that is going on currently right now. It dropped 30% just today. And we're going to see what happens next. All right, that is it for me today. If you want to help me out, I need two things from you. Both are free. Okay. The first thing, hit the like and subscribe button. Do that right now. Okay, do that right now. While you're there, hit the like and subscribe button. Right under that is a link to vote for the MAIA Financial Influence Award for 2023. Go vote because it's the last few days. Okay, let's go and bring this home, add to the trophy case. All right, I appreciate it. All right, that's enough for me. I will talk to y'all tomorrow.